So just in the last month, there's been a lot more mergers and acquisitions in the gold mining space. If you remember what I got from my source who was at the Denver Gold Forum in September, what my source said was that the mid-tier miners were looking to be aggressive and do the acquisitions, and that's basically what has happened. However, I want to talk about some of the deals that are being done, specifically the one on your screen there, the Equinox Gold, and some of the others. And what we're seeing is not all deals are created equal, and in the past, when juniors were bought out, normally a larger miner, a senior or a mid-tier miner, would wait for the shares of a junior miner to crash, and then they would pay a premium, 40%, 60%, 80% after the shares crashed. They would pay a pure premium after the shares crashed and come in and offer a premium to what the shares, close to what the shares used to be before they crashed. But we're not seeing that now for many assets. Now, the market is paying for valuations, is paying fair value or a slight premium for assets that are either in production, that are positive cash flow, like Yamana Gold selling their producing Chapada copper and gold mine to Lundin Mining a few months ago for a big amount. It was over $800 million. And then also about a month ago, the deal that Kirkland Lake Gold did for Detour, I would not call it a bargain up front. Now, there's going to be more analysis on that deal. I've been writing. I spent a couple hours working on research and writing, and that's probably going to be recorded, that audio, in the next couple days, or I will write an article, since I already wrote down my notes in a document. So I will either write an article in the next couple days, and that'll be behind the Patreon account wall, the paywall there in my Patreon account, or it will be an audio podcast, or maybe I'll do both to analyze that deal more. But Kirkland Lake Gold paid a higher price because that asset is already generating cash flow, and it's already generating some free cash flow. Although the valuation that Kirkland Lake Gold paid, which was $3.68 billion worth of stock, right now at the 600,000 ounce producing mine and about $180 million per year, they have about a $300 per ounce free cash flow margin at the current all-in sustaining cost for that mine. And if you multiply that, the $300 per ounce free cash flow margin at the 600,000 ounces per year, you get about 180. That's assuming $1,500 gold. So that's about $180 million per year in free cash flow. And then it's just about putting a multiple on that. And the multiple that's on that right now is not really that much of a bargain. However, I will talk about this. The CEO, I will talk about this behind the paywall on Patreon. The CEO of Kirkland Lake Gold says that there can be additional optimizations at the mine, growing production, lowering costs. And if that happens, this mine is going to be worth a lot of money in the future. So I'll talk more about the details about that in the audio podcast behind the Patreon account wall, or in the article behind the Patreon account wall, or maybe a combination of both. But the deal that got done this week was Equinox Gold, which Ross Beatty is backing. Everyone, if you're familiar with the mining industry, Ross Beatty is he's called the Broken Slot Machine, that's his nickname, because he's had so many successful companies with Pan American Silver and a copper company, I can't remember the name, and now Equinox Gold, where he's been buying assets. So Equinox Gold was able to buy Lee Gold Mining for no premium this week. So this is a consolidation deal, and Ross Beatty is putting in another $40 million into the deal, but there's rumors he may be putting in a lot more than that in the future. And this was a situation where Equinox Gold saw some assets that were selling at a discount, and they went and bought them, and they did not have to pay a premium for them. So they were able to buy out Lea Gold, and we'll see if it goes through. But as of right now, there is no premium on the deal. So the company, they're paying $69.3 million Canadian, or $578.38 million, the company said on Monday, in the consolidation deal. There's been deals worth $30.5 billion this year. Remember last year we had Barrick Gold merge with Randgold Resources. I didn't like that deal. I thought there was a lot of problems with it. And Newmont Mining merged with Goldcorp. I like that deal better. But remember last year when those deals got done, both large of the larger mining companies that consolidated said that they were going to sell their non-core assets, and they didn't sell them for over a year. But finally, in the last couple months, you're seeing the larger version of Barrick and the larger version of Newmont start to finally sell massive amounts of those assets. But most of the assets that are selling for a good valuation or a premium are the mines that are already cash flow or already generating free cash flow. So any of these junior assets, a lot of these junior miners are really not able to raise capital. So the CEOs, this goes back to what my source who was at the Denver Gold Forum said, was that the mid-tier miners were going to be very, very aggressive over the next 6 months or a year, trying to buy out juniors, and that a lot of the CEOs of junior miners, because they cannot raise capital to move their projects forward, a lot of these juniors can't even raise capital for drilling, or maybe some of them can barely raise money for drilling. So you have a situation where a lot of these CEOs for junior miners are willing to sell out, not for pennies on the dollar, but for no premium at all. And so that's what's happening now. So you have on one side of the deal, you might have a mid-tier miner that has free cash flow now at the current metals prices, gold and silver prices. When we're doing the show now, gold and silver prices, gold is at $1,477.65. Silver's back over 17 again at $17.05. And you have these mid-tier miners that might not have that much growth in the pipeline. They want to replace reserves. They have some producing mines, but those mines are being depleted because they may have not put in a lot of capex into upgrading them. And so those mines are close to depletion, and they may not be able to extend the reserve life. And they're looking to add more reserves or new mines or diversify their mines into other countries, more diversify geopolitical risk. And these juniors cannot raise capital. So the mid-tier miners are the ones who are taking advantage of this right now. Now also, all the precious metal royalty and streaming companies, even Metalla and Mavericks, are also benefiting from this consolidation, because all these royalties on pretty decent projects for some of these juniors, they're now going into the hands of mid-tier miners who actually have some free cash flow and actually have halfway decent balance sheets with maybe some cash to potentially develop those projects faster. So the counterparties for a lot of these precious metal royalty and streaming companies, not just Franco-Nevada, Royal Gold, Wheaton Precious Metals, although Wheaton Precious Metals did get some really good news recently. I think the news story came out, let's see here, on a couple days ago on the 13th, December 13th, Newmont's Peñasquito mine and Cedros community in Mexico agreed to a water pact. So that will really benefit Wheaton Precious Metals with the Peñasquito silver stream that Wheaton Precious Metals has. One analyst I saw is projecting another $600 million in free cash flow in the next 5 or 6 years over that. It's a massive silver stream on that. So there is good news. This is good news long term, that these assets are leaving the hands of the juniors and going into the hands of better counterparties, mid-tier miners, senior miners now. And some of these mines may not be developed immediately, like what's happening with Kirkland Lake and Detour Gold. Now, we'll see if another mining company comes in and bids a higher price to try to drive up the price for the Detour Lake mine. But, if these assets are generating cash flow, it's good for the mid-tier miners. Now they're not paying enormous premiums for those, and they're acquiring new assets sometimes for either no premium or even pennies on the dollar. And that benefits, I think, royalty and streaming companies in the long run. Also, there was one other deal. So there's been a lot of asset sales, like I said, from Newmont, Goldcorp, and Barrick Gold. They've been selling a lot of those non-core assets that they've been telling the market that they were planning on selling for over 12 months, and they didn't sell those. So mid-tier miners have been buying them. Also, there was another deal recently at the beginning of December. Zijin Mining, which is a Chinese gold miner, acquired Continental Gold in a friendly all-cash offer for 1.4 billion Canadian. So there is more deals coming. This is my source that was at the Denver Gold Forum was on point. Said that the juniors would still not be able to raise capital. So the juniors a lot of them were looking to sell the company, giving up. And that it was going to be the mid-tier gold miners that were going to be the most aggressive. And you're seeing that now with Ross Beatty and Equinox Gold. Equinox Gold is being very aggressive. They're adding a lot more growth assets to the pipeline. Oh, and I have a couple more things I wanted to talk about. So I'm not going to do full analysis of the Kirkland Lake deal because I'm going to keep a good amount of that behind the paywall for my Patreon account contributors, so I can hopefully get 300 next 12 months or so, but maybe another dozen or so signed up in the next couple weeks. But I am going to play some clips, some audio clips from Eric Sprott talking about the Kirkland Lake deal and exploration upside with Kirkland Lake. They're from the last 2 weeks of the Sprott Money podcast. So this clip that I'm going to play right now, this one is going to be a little over 4 minutes long, little over almost 5 minutes long. So I'm going to play this one right now, and it's talking about the Kirkland Lake Detour Gold purchase of the Detour Lake mine.
For today, though, Eric, I know a lot of folks are dying to hear an update from you. Get your thoughts on the acquisition of Detour Gold by Kirkland Lake. I'll just let you take it from there.
Okay. First of all, one other data point I didn't mention. You wouldn't know this, but we also have a jobs number in Canada for the month of November. We lost 71,000 jobs.
Of course, yeah, okay.
But then again, we have totally different parameters. We don't have consumers like you do.
And honesty play into that?
Okay, so here's what first of all, I actually gave an interview to a Globe and Mail reporter yesterday saying I would vote in favor of the merger. I've had a lot of time to review Detour, and I want to point out a few what I call big deltas, macro deltas, things that are changing at Detour, which was the reason and the support for buying that company. And first things I would say are this. In the third quarter, Detour produced 137,000 ounces. In the month of October, they produced 60,000. That's 180 annualized in a quarter, way up from 137. They are pushing up against their 75,000 tons per day of processed ore limit. They're not allowed to ever go over it. And they're going to make an application to go to 90,000. Well, you know what? 75, 90, that's a 20% increase. Yeah, okay, 20%. So let's imagine that the 60,000 a month is 720 a year, which is higher than the 600 they're looking at. We're going to add 20% to that. Now we're going to add another 140,000. I've just banged on 260,000 ounces to their potential production. Okay. They also mentioned that they hope to get 75 to 100 million of synergies. The mine ore grade, the reconciliation of ore that they expected to have in particular places is running 21% higher than they expected. Now, that would affect the future reserve calculation more than anything else, but it also suggests you might have 21% more years of ore to process. Another interesting thing is that the reserve grade, as defined, is 50% higher than what they're mining right now. Well, let's think now, 50% on top of the 600, that's another 300. Oh my God. You could have a pretty interesting story here. We also have the exploration side of it. It's a huge property. It's like 1,000 square kilometers. It's on the Sunday Lake Deformation Zone, which is the same zone that Walbridge is on. I will try to connect that a little later on. So it's a very prospective area. They actually have some subsidiary deposits. There's one called 58 North that's got about 5 gram material versus the approximate 1 gram material of the existing mine. So they only spent $7 million on exploration. I think Kirkland spent probably $120 million on exploration this year. And that's because they were hanging on all the time. Between, the shareholders that were always upset with them and the low price of gold, this company was just hanging on. It's one of these things where, all of a sudden the price of gold goes up, a partner with money in his jeans comes along, and things can change very, very dramatically. And I think Tony has been in the news suggesting that he thinks he can get them to 900,000 ounces a year from 600, and that the cost could go down to $800, something like that. So this company could earn $500 million on top of the roughly whatever 600 million that Kirkland makes. I think Kirkland at 600 million is about the 47th largest profitable company in Canada. If you add another 500, they're going to go into the low 30s, which is a statement about how significant Kirkland Lake Gold is. So I think the acquisition will be very helpful. One of the nice things about the acquisition, you're buying it with shares, okay? From day one, it's cash positive. Like the money's pouring in. You didn't use any money to buy this. So it's going to be very constructive and might very well lead to a company that can pay very significant dividends. I hope it does, okay? So that's about it on Detour.
And one more rumor that's going around is London's Centamin mining company, which operates a producing mine in Egypt that's generating a pretty good amount of free cash flow, agreed to assess the feasibility of a merger with Canada's Endeavour Mining, which is a diversified gold miner that has really good gold mines. They're a mid-tier gold miner all across Africa. They own the Houndé mine, which Sandstorm Gold has a royalty on, and there was some big exploration upside there. They own the Karma mine. So Endeavour Mining is a pretty solid, just my opinion, pretty solid mid-tier gold miner that has some pretty good mines, producing mines throughout all parts of Africa. And they had earlier rejected a $1.47 billion all-stock takeover proposal as inadequate. So they're discussing a further deal, even though the all-stock takeover was inadequate. So there is more deals coming, but what my source said was, unfortunately, the juniors still cannot raise capital. And this goes back to gold mining ETFs. This goes back to a lot of people do not believe in the rally that the gold price in US dollars has had. And the inability for so many either small producers that are struggling or juniors that can't raise capital to drill or can't move their project along, a lot of management teams are just giving up. They're selling out for pennies on the dollar or no premium. So I expect this trend to continue. The beneficiaries, it looks like to me, will be the mid-tier miners that are either buying the non-core, in air quotes, assets from Newmont Mining, from Newmont Goldcorp and Barrick Gold, and then also the royalty and streaming companies who will have the opportunity to step in with capital because they're generating better margins and free cash flow, the larger producing royalty and streaming companies, to do more deals. If the gold price goes up, they'll do more deals on new mines. If the gold price stays at these levels or goes sideways for a while or goes down, they'll need to come in and help producing miners repair their balance sheets. And then also the royalty and streaming companies, even the smaller ones, are having their counterparties upgraded because if a mid-tier gold miner buys a junior deposit and a royalty and streaming company has a royalty or a right of first refusal gold streaming option on a junior mine, and then a mid-tier miner buys it, that project's going to be accelerated. That project's going to a better mining counterparty. So the juniors still cannot raise capital. I've been warning about this for over 12 months now, and the market conditions have not changed. But I think what has changed is, and the source that was at the Denver Gold Forum says this, a lot of management teams at these juniors has thrown in the towels. Now, there's an occasional junior, like a Silvercrest Metals, which is hitting unbelievable drill hole results, supposedly, according to some of my contacts, mining contacts that I follow on Twitter. Unbelievable silver drill hole results, and a few others that are raising some money and moving projects forward. But the majority of juniors, that is not true. It sounds like Wallbridge is doing pretty good, but that's because Eric Sprott is backing them. So there's one more Eric Sprott clip I want to play, talking about the Detour, Kirkland Lake buying Detour Gold, and then also the land package around it, Wallbridge. So I'll play that right now.
For one day, okay?
Fair
so
enough.
let me talk about a few stocks here. I guess I should start with Wallbridge simply because it was announced on Monday that Kirkland Lake did buy 9.9% of Wallbridge, which I speculated a senior would be in there. I really wasn't sure whether it was Kirkland or Agnico Eagle, but because on the street here, on Bay Street here, nobody bought the issue, okay? So if no institutions bought the issue, well, who bought the issue? And, of course, by definition or by assumption, it had to be a strategic partner. So I'm glad to see Kirkland in there. Kirkland's also bidding for Detour. Detour's on what they call the Sunday Lake Deformation Zone. Walbridge is on the Sunday Lake Deformation Zone, 80 kilometers away. As it turns out, Balmoral's in the middle with a great part of the Sunday Lake Deformation Zone. But I do believe that when you get a major that sticks that kind of money, I guess it was approximately 30 million, something like that, into a company, they're not in it for littles, okay? They're not in it to see the stock go from 60 to 90. They're in it to see the stock go from 60 to $6 or something, hopefully. And they will increase their interest as time and drilling results present themselves. And, of course, we could have some stunning drilling results coming out of Walbridge here. We already know the holes have abundant sulfides and abundant visible gold. Well, my God, it's pretty hard to imagine with that kind of description that the drill results will be poor. So I love it. I keep trying to figure out how can I sort of got diluted here in all these issues shortly. I know I'm going to be doing something about part of it, but it's the favorite thing that I'd like to be able to buy, which I haven't been able to buy for a long time. So I want to move on to Kirkland Lake because they announced 2 sets of drilling results, one from down in Australia. Actually, they had 2 Australian ones. One of the interesting ones was they did some infill drilling on the Swan Zone down at Fosterville, and here are the highlights, some of the highlights, okay? 924 grams over 3.6 meters, 918 over 7 meters, and 625 over 3.6. I mean, man, those are just outer worldly, okay? And it sort of tells me that the Swan Zone is going to be higher grade than what they have it in for at the present time, okay? That when they incorporate these infill drilling numbers, the grade at the Swan Zone will go higher. I always thought it would be a 60-gram ore deposit. I think they say it's 40 now. But, you know, they cut things, and I think the real results will be better than that. Speaking of cutting, I wasn't going to mention this, but a company called Cisco did a bulk sample where the pre the sample, the grade was expected to be something like 9.8, and it came out at something like 17 grams. It was 89% better than expected. So sometimes when you're measuring these things, you can be very, very, very wrong on your number, and knowing that there's a lot of conservatism built into numbers like that, you normally have upside opportunity that the market isn't aware of. Sticking with Kirkland, they also announced some drilling at Robbins Hill, which is a property north and east of Fosterville. And they suggested that they're moving into Fosterville started with low grade, then it got into moderate grade, then of course they hit the Swans and it went crazy. And they've gone from low grade at Robbins now into the moderate grade, and they firmly believe that they're going to have another Swan in Robbins Lake and or at Harrier. Also sticking with Kirkland, they announced some results in the amalgamated breakup in Macassa in Ontario. They too were great. So I still think I love the acquisition of Detour. I love what's going on in the Sunday Lake Deformation Zone, including Walbridge. So I'm kind of, and of course I like the fact that Kirkland owns some Walbridge because I think it's going to be an excellent investment.
Okay. So I played enough of that. I think you get the gist of it. There's some good analysis there about Kirkland Lake Gold and Sprott's opinion of the deal, with Detour Gold, and then also Walbridge, which is a junior that has a land package right around pretty close on the same fault zone apparently to Detour Lake's mine and one other mine that's potentially going to be developed as well. But the market is paying a good price or premium only for producing mines right now in mergers and acquisitions. That is what you need to know right now. And I think the larger precious metal royalty and streaming companies stand to benefit from all this again. I know there's people out there that don't like the royalty and streaming companies, but they have as long as they don't over leverage the balance sheet or do a bunch of bad deals in a row and have a bunch of write-downs, there's always opportunities for them as long as they adapt properly to changing market conditions. Solid jurisdiction, Michael. Politicians change the rules. Look what happened at Fosterville, where the lazy politicians there put on a new royalty tax because of how economic the mine was. What's a solid jurisdiction? Canada and Australia? All these politicians are going to keep changing the rules. There's going to be tax increases on pretty much across the board. Streaming companies are way safer. They'll underperform to the upside. At least you can sleep at night. Some of these mining companies, if there's a problem at one of the mines, the mining company could be bankrupt a year or two from now. In these market conditions. The mining company doesn't have a lot of cash on the balance sheet. Mining company could be in trouble. Endeavor Mining's, Endeavor Mining's doing very well. That's a diversified African mid-tier gold producer. I'm talking about Endeavor Silver. Endeavor Silver is having big problems now. Africa actually has the better geology, Michael. So eventually we're going to be mining really, really low-grade stuff. I mean, the stuff that's being mined now is pretty low-grade, but the grades can get a lot lower. At some point, the grades in safe jurisdictions are going to be totally uneconomic, probably. So then they're going to start looking at mining the ocean floor. Well, if the environmentalists will let them. Otherwise, Bloomberg's going to be running. Nautilus Minerals just went bankrupt, and I think I heard the Chinese bought the intellectual property and the patents. Or Bloomberg will be running stupid segments about asteroid mining, when probably that's not going to happen in my lifetime. And I'm in my 30s. Thoughts on Yamana Gold? I think Yamana has a lot of risk. They have a bad balance sheet. Yamana Gold has Cerro Moro's doing very well for them. Cerro Moro's a really good mine, and Sandstorm Gold's their partner there on a silver stream. But Yamana Gold still has a bad balance sheet, and Yamana Gold is going to have to sell their 50% stake in Agua Rica probably as soon as very shortly after the feasibility study comes out on Agua Rica. They can't afford the capex bill. What came out with the pre-feasibility study was Yamana Gold would need to be on the hook for like $1.2 billion in capex, and they don't have the money. Hello, Sam. I think they upped the dividend recently stupidly. They sold the sale, when they upped the dividend, they sold Chapada, which was their best margin, best long life mine. Even though it was more of a copper mine, it still had really good exploration upside. The mine has like almost 30 years of reserves. And they sold it to Lundin Mining for $800 million. Nova Gold, I haven't looked at. I haven't looked at all these juniors with large projects. You're welcome, Kevin. I'm glad you liked it. I haven't looked at a lot of these juniors, guys, so you putting names on here, I haven't looked at a lot of them. Sam, I issue you a fair warning, just my opinion. It is very dangerous for a mining company to be paying a dividend. It can be cut very quickly. Mining company can go from a lot of free cash flow to, if metals prices fall or oil prices rise or problems at the mine, the margins could be destroyed. So if you're relying on dividends from a mining company for income, I haven't seen any updates on Mag Silver. They're supposed to start construction at the end of next year, I thought. The mine's still economic at current silver prices. They're projecting all-in sustaining costs at $10 an ounce. I was just told that a uranium royalty company just went public a couple days ago. I don't know how they're going to store the uranium, but the business model looks interesting. You can just search uranium royalty. You should be able to see it. Yeah, so Mag Silver, the big bump, in my opinion, the big move in the stock will come not from the silver prices going, but once the construction starts, and there's all the pictures on the Fresnillo website and the Mag Silver website, the pictures of the construction, the videos of the construction, because then people start to realize that the project's going to be de-risked, the mine's going to start, commissioning and ramping up to production and getting to economic production levels. And then once Mag Silver starts getting, free cash flow from that, that's going to be a big opportunity for them. So you're still a little ways away from that, but it is, for now, the best undeveloped silver mine. Best 400 grams per ton average. It's really good. And a really long reserve life. And they have a good partner. The largest primary silver miner in the world in Fresnillo, who's developing the mine. So this is not a junior miner that's trying to build in these market conditions a mine all by themselves. It's Fresnillo who's building the mine. And Mag Silver is just the partner. They have a minority, a 44% interest. Joint venture partner. So they have a really good partner who's going to build the mine. Someone who's built a lot of silver and gold mines in Mexico. Hey, Michael, I don't think you've studied streaming companies enough, because the streaming companies like Sandstorm Gold, they have a lot of assets in the portfolio for optionality. There's a ton of assets not in their cash flow projections through 2023 that if the gold price goes high enough, that those could be developed. So saying that they will underperform on the upside, I don't think you've done your homework. Now, in the past, royalty and streaming companies, the larger ones did underperform, but I don't think you understand the amount of growth that Sandstorm Gold has in their pipeline for more than the next 5 years. There's easily a decade's worth of growth in their growth pipeline that's not in their cash flow projections. There's over a dozen right of first refusal gold stream option contracts that are already secured for future mines and a bunch of royalties. There's over 150 other royalties that those mines can be built. For example, with Hackett River. Hackett River is up in, I think, the Yukon area. And that's a really large mine from Glencore, I want to say. And if the gold price goes to like $1,700 an ounce, that mine could get built. And then Sandstorm Gold has a royalty on that they bought in 2016. And that royalty will cash flow $9 million per year. Projected from the feasibility study that came out on that mine. You do your homework, but you call Sprott a weasel. I mean, Sprott's pretty good at investing. I would love Sprott's track record. I mean, he was right on Kirkland Lake Gold when no one else was. He was in there buying tons of shares of Kirkland Lake Gold when no one else was. That stock was at like $2 or $3 a share in 2016. It was like $3 a share in 2016. So it went up over, when it was at $2 a share, he was buying it, a lot of it, and it went up over 20-fold. Maybe the other royalty and streaming companies, Michael, but not Sandstorm Gold. They have so much more growth in the pipeline than a lot of the other companies. Nolan Watson has really outworked the competition. I won't go into exact detail because that's for my Patreon account contributors, but there's a lot of examples that he's really outworked the other competitors there, and he's built more growth into the growth pipeline than most people realize. That's not in the cash flow projections. No, Sam, best bet is not to stick to the majors. The average retail investor really should not buy any individual mining stocks. So unless you actually know you're subscribed to a good paid newsletter or you know how to do the research of the financial statements yourself, you shouldn't be buying any individual mining stocks. If you're not competent to read financial statements, understand that. The average retail investor, in my opinion, should only buy mining stock ETFs or royalty and streaming companies. So like a Franco-Nevada, in my opinion, is the safest gold stock, even though it's quote-unquote never cheap. Wheaton Precious Metals, I just said, looks like they're going to have a lot more growth than people realize now with the good news at Peñasquito, with that silver stream that's going to start generating more free cash flow for them, now that this issue appears to be resolved with the water rights at Peñasquito. And there's a royalty and streaming company ETF that's GOAU. That's like a basket of royalty and streaming companies. No, I would not stick with the seniors. The seniors make lots of mistakes. Now, it looks like Newmont Goldcorp is doing better now, but Barrick Gold has a track record of lots of mistakes. And there were some people that actually liked last year that merger with Randgold Resources, but there's been a lot of problems with that. There was like a 5-year restructuring plan announced, and there were rumors that the current CEO of Barrick Gold needed a new, very serious heart surgery soon, and he had already picked his successor, and he wanted out because of all the problems with the mines. and all the mines that they wanted to sell. Well, I criticize Eric Sprott about how he wants to ban short selling on juniors. Look, I respect Eric Sprott a lot. I met him in person a couple times. I like him a lot. I don't agree with everything he says or anything anyone says, really, but I don't think short selling should be banned on juniors. But I think a lot of these juniors, unfortunately, out of Vancouver, are extremely dishonest. Having been in this industry now for a decade, it's pretty amazing some of the crazy stories I've heard, some of the stuff some of these juniors have gotten away with. Although now they really can't get away with a lot of the stuff anymore because they can't raise money. They can't raise money, so they can't waste it. So they can't go pay pumper YouTube channels like thousands of dollars to do promotional interviews or ads or anything like that. Or pay like a newsletter writer so that he doesn't disclose, the newsletter writer doesn't disclose it like 50 grand and a bunch of warrants to write research reports on the stock. Okay, well, I think that's it for today's show. So I'll attach article links to some of the stories I talked about if you want to check it out. But it looks like the mid-tier gold miners they have better balance sheets and better mines with free cash flow, and they're being very aggressive. The mid-tier gold miners are with buying juniors and buying good projects now. And so you're seeing growth assets where the juniors cannot raise capital to either drill or advance a project into production, and the mid-tier miner either doesn't have a growth pipeline or wants to increase the amount of growth in their pipeline, and they have better balance sheets and better cash flow, free cash flow margins right now. So the mid-tier miners are the ones being the most aggressive in this market, and they are the ones buying the assets for either pennies on the dollar or no premium. First Majestic was having problems a year and a half ago, early 2018, and they seem to have fixed a lot of them, and they seem to be in pretty good shape. Now, First Majestic, though, is going to have to buy a growth asset. They're going to have to buy something else. So they tried to buy Orco Silver a couple years ago and lost in a bidding war to Coeur d'Alene. First Majestic Silver is going to have to go buy something else soon. They're going to have to get a growth asset. So I would like to see First Majestic Silver go and buy another growth asset soon. But operationally, First Majestic Silver's mines are doing pretty well. Santa Elena looks to be back on track. Yeah, the juniors, Michael says, Canadian gold miners, the penny juniors are mostly scams. Yeah, they're good at harvesting from their own shareholders. So in these market conditions, the larger royalty and streaming companies that do not have too much debt and do not have a bunch of write-downs should benefit. And the primary gold miners, the mid-tier miners, are going to be the ones that are buying the assets for reasonable valuations. Unfortunately for the juniors, they are not getting premiums. So in the past, they could have gotten premiums, 40%, 50%, 60, 70, maybe even 80% premiums sometimes. And the juniors are not getting those on assets right now. No, I don't follow Metalla that much. I've looked at a number of their deals, and they pay a lot for they dilute a lot with shares on all their deals. And they pay, when they try to acquire cash flow, they pay like 20 times or more cash flow, so I'm not interested. But I'm not saying Metalla stock is going to crash. I'm just saying that they're not doing things very efficiently. If you have to pick one or another, Sandstorm Gold's a far more efficient allocator of capital for growth. And I still think Sandstorm Gold's reasonably valued considering all the future growth in its growth pipeline, just even for the next 5 years. But there's a lot more growth in the pipeline that's not in the cash flow projections than just that. But if you don't have the money to buy individual royalty and streaming companies, a couple of them, it's probably smarter to buy like the Golden Royalty Streaming ETF, the GoAU, and then you just have a basket of those. Like Franco Nevada's in there, Sandstorm Gold's in there. I haven't looked at Nova Gold that much lately. Northern Alaska cratered today from dilution, 20% drop. Yeah, the Kirkland Lake shares dropped too on this deal. I'll talk about that behind the paywall for Patreon account contributors. So thank you very much to my over 200 Patreon account contributors. More people are signing up every day. It's making my life a lot easier. I can focus on research, content, and analysis of the global economy and different markets. And thank you very much to my dozen or so monthly PayPal contributors and people throw me a tip once in a while. I got a couple tips after I released that video earlier today. It's funny, when I started doing these covering China more with the financial system and the banks, people just started reaching out to me with videos and information. I have videos too. I have pictures and video of all these cars in one of these ICB branch parking lots, all these repossessed cars. So I have like pictures and video of that too. I'm not sure if I should release those, but I'm not sure how many views that one would get. But it just shows that auto sales in China, there was too many and cars were being repossessed. I mean, that's happening here in the U.S. too. So the Patreon account contributors in the next couple days, hopefully, I already have most of the notes written for the Kirkland Lake gold buys Detour gold analysis. I have to look up a couple more things, and then either I have to put it in an article format or record some audio podcasts, and you'll get that hopefully in the next couple days behind the Patreon account paywall as an added bonus. Okay, everyone, bye for now. Have a nice night. And there will be, of course, more content coming in the next couple days.